Hello and welcome to Market Domination. I'm Julie Hyman. That's Josh Lipton, live from our New York City headquarters. We are giving you the ultimate investing playbook to help tune out the noise and make the right moves for your money.
And here's your headline blitz, getting you up to speed 1 hour before the closing bell rings on Wall Street.
With Nvidia, we can all expect them to produce sort of, I think, mind-blowing earnings. But really what the market is focused on is that growth rate. And it's all about the guidance. How enthusiastic and how aggressive are they on the guidance? It's all, it's a growth story here. We all know it. It's the future. It's the next big thing. They've got to keep us excited about it via this earnings print.
It'll come down to guidance and how the retailers are seeing holiday go into Q4 and also how we view Q1 for 2025. And in terms of promotions, if the consumer is shopping those promotions, will they be able to balance that act? Will we still have great margins? Because retail in the past 2 years, we've had margins that we haven't seen in a very long time.
The earnings growth momentum is slowing. It's not as fast as it was. And when you look at stocks like this in the stock market, you look at the second derivative. It's the rate of earnings growth, if you see what I mean, that really matters. So I think that'll be the focus. You look around the semiconductor sector, quite a few stocks are really struggling. It's not all, so it's getting harder. The sort of focus is narrowing in on not much left in terms of semis and tech driving this market higher.
We got 1 hour to go until the market closed, and we're taking a look at the major averages here. Mixed picture, right? So we had big surge after the election, big come down last week, and now it's sort of just a muddle, I guess, right? So we've got the Dow down about 67 points right now, about a fifth of 1%. The S&P 500 is up 0.4%. And then you got the Nasdaq up 0.6%. But within large cap tech, it's sort of mixed here today.
Yeah, I think it feels like we're just kind of maybe taking a breather, settling out here maybe. Julie, in terms of the setup for this week, it's a relatively light economic calendar. We do have, a big name reporting, Nvidia, the face of the mega AI trade. That could help shape the market. What's interesting, though, is it also just feels like politics is weighing. That is big in discussion. Who is Trump's pick going to be for Treasury Secretary? That is generating a ton of headlines, a lot of personalities. I do think investors are also still just trying to wade through his policies, tax cuts and deregulation versus the trade policies, and trying to make sense of it.
Right, and trying to figure out what's actually going to happen, because, I think the further we've gotten from the election, there's this sort of vibe around the election, and now it's down to the nitty-gritty of, what are the policies actually going to be? How are they going to be enacted? Who's going to be enacting them? And we don't have answers to those questions yet. Even the people he's nominated, we don't know if they're going to be confirmed by the Senate. So a lot of questions around the so-called Trump trade, right? So that's sort of playing out in the markets. Just a quick check on some other assets here. We've got the 10-year kind of hovering here as traders try to weigh what's going to happen at the December Fed meeting. A lot of questions about that now as well. We continue to watch Bitcoin flying high here, a lot of volatility throughout the day. And then we also have been watching oil, which has been surging here. A couple things going on, escalation in Russia-Ukraine situation, and then there's also an outage in Norway. So some supply concerns there pushing up oil prices.
All right, well, let's get more perspective on this. The Trump trade has lost some steam over the past week, as we were just talking about, with the S&P 500 having erased more than half its post-election gains. So where does the market go from here? Well, joining us now is Jeff McClain, Solidarity Capital's CEO. Jeff, it is great to have you on the show. So let's start there, Jeff. We had this big move off the Trump win, and I do think investors, Jeff, are trying to figure out what happens next. What do you see, Jeff, for this market as we wrap up the year and into 2025? Are we moving higher, Jeff? Moving sideways? What do you think?
Yeah, no, thanks for having me. I think on a go-forward basis through end of year, you're going to be super volatile, because every time a Trump selection comes out, it seems to affect the markets, whether that's in the healthcare space with pharmaceuticals, that's moved quite a bit, whether that has been in financial stocks. You're going to see continued move, but I'm bullish on next year that we're going to be able to have something powerful coming into next year around M&A, IPO window, I think opens back up next year. I think that is coming, and that's where the excitement comes from, and you're seeing that in the financial stocks. M&A, IPO, anyone with an investment bank has gotten a pop, and I think that's justified.
It's so interesting that you say that, because that does seem to be the sort of sentiment. And yet, when you look at the first couple of regulatory picks that Trump has made, particularly Brendan Carr for the FCC, this sort of assumption that the floodgates are going to open and everything's just going to get rubber stamped. Is that really how it's going to play out?
I don't think so. And I think it's not going to go back to 2021 where investment bankers were living their best life. But I do think it opens back up. This past year, in 23, 24, it's been super slow in that space. Now, just by replacing Lena Khan at the FTC, that's going to help with the mega merger space. You're seeing that with what happened with Spirit Airlines, right? They wanted to merge with JetBlue. She fought it, and now what happens today? They file for bankruptcy. And so I think it's going to help that space, and then trickle down effect. I think you're going to see S1 filings starting in Q1, IPOs coming, and then I think you're actually going to see M&A deals closing, which has been tough to come by the past couple of years, is them actually closing in Q3, Q4 next year.
So do you play that by trying to figure out where the consolidation is going to be, or do you look at the investment banks and buy them, or both?
A little bit of both. I mean, financial stocks, I think, again, those are justified the pop they've had. I think there's a lot to like in those stocks, even though they're going to be bearing the brunt of easing interest rates now, right, where they're not going to be making as much on their cash. But I do think that they're going to be strong from an investment banking perspective. And in the small cap space, you might find some opportunities. Companies, if they've survived the past couple of years, pretty rough in the small cap space. If they've survived, now is the time that they can thrive and potentially get acquired if they came out of that clean the past couple of years.
Let me ask you, Jeff, your thoughts on the Fed too, because it was interesting last week. Jay Powell, certainly made some headlines with that kind of no hurry to lower rates comment. What did you make of that? What do you see ahead for the Fed?
I think he's just trying to calm the market animal spirits a little bit, to say, hey, relax, guys. We're not going back to, free credit, basically. But I'm a in Jay Powell I trust kind of guy. He's done an incredible job. I do think they're probably going to slow the cutting, because when you look at inflation data, there's still some data in there around professional service fees, around insurance, that are pretty gnarly still. And the tough thing about inflation, it is sticky. And so he has to be super careful that we don't come back to what happened in the late 70s, early 80s. If you remember, one of the rumors going around are we back in this early Reagan period? Those first 2 years of Reagan coming off extreme inflation were really bad in 81, 82 in the markets. It was only the latter half of his first term that the markets took off. And so that's one of the worries as well, if they don't tame it.
Well, and it's interesting to come back to small caps, because, it seems like this is the year that everybody has loved small caps, and small caps have not loved them back, so to speak. They haven't done as well. But part of that argument has sort of hinged on rates continuing to move lower and benefiting small caps. Do they have to move much lower for small caps to do well?
I don't think they have to move lower, but not that much. Like, if we're 100 basis points less this time next year than we are today, they'll be great. And you're starting to see that with the pickup. Some of those that were really hit hard, think of the technology small caps in 22, they're starting to come back up. Look at, like, SoFi's just one off the top of my head. They've really come on strong since 22. That's an interesting one that parlays kind of the Trump trade financial services with the idea that small caps could do well too. You marry those two together, has some potential really to carry.
Switching gears from small caps, Jeff, Nvidia is reporting this week, the face of the mega AI trade. How important is that, in your opinion, for the market?
I think it's going to carry the market and really have a determination of where we go for the rest of the year. If Nvidia has something where they miss, you watch out for in a short-term perspective. I don't think they will miss. I think they'll come right along expectations, maybe slightly beat. And it's going to carry and get us back into not necessarily the Trump trade, but more market normality where we were before the election. But again, it's going to be volatile, because again, no matter who he names as Treasury Secretary, the market's going to react. No matter who he names as FTC Chairman, the market's going to react. So it's just, you have to prepare for the volatility the next couple of weeks, because everyone seems so tied up and emotional in the momentum trade right now.
I want to talk a little bit more about earnings, though, because that is obviously the fundamentals here. JP Morgan, in a note, was pointing out something interesting, which is that the Magnificent Seven earnings, since we're talking Nvidia, that they have been decelerating. The earnings growth has been decelerating. And if you look at, they have a chart of kind of how the other companies, S&P 500 companies, ex-Magnificent Seven have been doing. And they've been accelerating a little bit, but not anywhere near making up for that growth. So what does that look like going forward?
I think there's going to continue to be broadening with the rest of the S&P 493, right? Everything's been tied so tightly to the Mag 7 that it's gotten a little out of whack. I mean, you look at what Nvidia is trading at, even looking at them versus Google/Alphabet, right? A huge difference in what they're trading at. And so I think you're going to see continued broadening out. I don't really have a huge expectation for the Mag 7 to continue their sky-high growth and gain, although I wouldn't bet against them, specifically around the AI trade, whether it's Microsoft, Google's doing interesting things. They've released, I think it was in Fortune last week, they said 25% of their coding is now done by AI. I mean, think of the cost savings from a Google investment, from employee reduction. That's something. That's real dollars of what AI could and can do.
Jeff, great to meet you. Thanks for coming into the studio. Appreciate it.
Yeah, thanks for having me.
Thanks a lot. Well, we're just getting started here on Market Domination. Coming up, we'll discuss some of the stocks making the biggest moves on Yahoo Finance's trending tickers page. Plus, Robinhood shares are surging today after an upgrade from Needham. We'll have the analyst behind that call later this hour. And it's another edition of our series of Goodbye or Goodbye at 3:30 Eastern. We're going to be talking about non-Nvidia chip-related names. Much more Market Domination still to come. Time now for some of today's trending tickers. You can scan the QR code below to check out the best and worst and most looked at stocks of the session on Yahoo Finance's trending tickers page. First up, Tesla. Elon Musk's big bet on Donald Trump seems to be paying off in a big way. The stock is jumping today. There's a report the Trump transition team is prioritizing the creation of a federal framework for fully autonomous vehicles. Joining us now with more is Yahoo Finance's Pras Subramanian. Now, we don't know, I don't think, what that framework is going to be, but the stock is definitely flying today on this.
Yeah, we don't really, exactly, framework. What does that mean exactly?
Yeah.
But I think what people are bullish on is that there are rules right now that say cars all need to include like manual controls, like a steering wheel and pedals. And the rules have slightly tweaked where it says, maybe not a steering wheel, but it's some kind of object.
A steering column.
Something,
or whatever.
mechanism, right? And the thinking is that with this framework that might actually get rid of that, and you might not need to have any kind of manual controls for robo-taxis or autonomous vehicles. And that's what the Cybercab is basically. There's no pedals or steering wheel in that thing. It's just two seats. So that's the sort of the bullish case for Tesla. If you allow this framework to be in place and you allow more testing and a better, easier rollout, then that's good for the stock.
What's interesting, Pras, though, because obviously we're talking about federal rules here, but I mean, we talked a lot about how states play this very important role too.
Right.
So it's just sort of interesting how that all kind of shake itself out.
I think a lot of states will look to the federal government and the state or federal agencies to sort of use as a guidelines for how they want to implement these novel things with cars driving by themselves. But also, if you're the federal government, you could say, oh, you don't want to use our rules, then we're not going to give you highway funds. And there's a way to carrot and stick this with the states. And sometimes they're like, okay, we need the money. So, but California and New York doesn't necessarily, they might have more hands to play there than just that. But you're absolutely right. There's going to be a local element, a local and state government element for this.
It seems like Uber and Lyft are falling today with this happening. But why is that?
It's if the robotaxi efforts from Tesla take over and then crowd out the market for Uber and Lyft. Oddly enough, Bloomberg reports that Emil Michael, who was a former Uber executive, potentially could be a Department of Transportation secretary.
I saw that. Yeah, that's so interesting.
We've had him on the show before a few times, so that could maybe be, I don't know, it's part of it, but there's something there with regards if Tesla is a new ride-hail competitor.
Right, although it's not clear. I mean, Uber and Lyft is taking the partner approach. Uber is taking, I believe, that it is developing some of its own technology, right?
They partner with other people too.
So it's not like they're not doing, I mean, it's not like Tesla would automatically be ahead of them.
No, but it would just be another competitor. They talked about scenarios where you could buy like 5 Teslas and just have them go out doing it for you. And you be a small business owner and you have 5 Teslas kind of running around doing ride hailing. So
of course, Tesla still has to make the thing.
Correct.
Yeah. That's one caveat.
Yeah,
Thank you, Pras.
caveat.
Appreciate it. All right, our next trending ticker, Super Microcomputer. Let's take a look at that one. Check out the move today, up about 27%. Server maker approaching a deadline here, Julie, to either file this delayed 10K or submit a plan to file the form to the Nasdaq to remain listed on that exchange. We have talked about this name at length, an AI darling. At one point, the stock has now just nosedived from that March peak, of course.
Yes, it has. And, there was a report in Barron's that the company did plan to, come out with some sort of filing today. That filing, as of yet, has not come, but the stock is moving ahead of that in anticipation of that. The stock, you and I were talking offline, is heavily shorted. So, seeing that move there, but all of this move, again, without the actual news that there has been some remedy here. So, and the stock has been beat up a lot, to be sure, as well. As we talked about recently, it's come down something like 80% from its highs of the year.
Yeah, if they did get delisted, by the way, as reports are quick to note, it could likely remain a removal from the S&P 500 index, right? And remember earlier this month, they offered that weaker than expected outlook. So there's been a number of challenges, but today, pop.
Yes. All right, next up in trending tickers, we've got QXO as well as Beacon Roofing. Now, the building products distributor making an offer to acquire Beacon Roofing Supply. That's according to a report from the Wall Street Journal. Beacon's got a market cap of around $6.7 billion. It's the largest publicly traded distributor of roofing materials and other complementary building products in the U.S. and Canada. According to that same report, a deal could be agreed to before the end of the year. Beacon Roofing shares, by the way, have been flying on that report. I did reach out to QXO and they declined to comment on this report, but this is what QXO was built for by Brad Jacobs, who formerly was in the logistics and trucking business. He then looked at, okay, what's my next thing going to be? What's the next thing that deserves sort of roll-ups? And he decided it was this sort of building product distributors.
Yeah, the Journal has this one. The exact terms of the offer, it doesn't look like they could determine that at this point. Brad Jacobs, well-known guy, has friends in high places, by the way. Trump's son-in-law, of course, Jared Kushner, sits on the board there. Yes. Always helpful, I would imagine.
It probably doesn't hurt.
No.
Exactly. And so this would be, again, this was created to roll up these types of companies, but it hasn't yet bought anything. So this would be the first acquisition of this new sort of consolidator. So we'll see if it gets confirmed. Yeah. All right, let's look at Nvidia now. That company reporting its third quarter earnings after the close on Wednesday. Blackwell chips, of course, will be in focus for investors on the call. The information reported that the chips are overheating in servers. For more, we're bringing in Hans Mosesman. He's senior research analyst at Rosenblatt Securities. Hans, we've seen the shares pull back a little bit, seemingly, on this report. And it's not the first report that we've heard about Blackwell sort of growing pains, so to speak. How big of an issue do you think this is?
Well, it is an issue with Jensen over at Nvidia pushing the envelope of technology and Moore's Law, moving from a 2-year cadence to a 1-year cadence. It's very hard to do this. And the supply chain doesn't necessarily move that quickly. And so there are issues that have to do with power, overheating, and that's why there's a need to move to liquid cooling and so on. But we think the ramp, while delayed, is going to happen in the first half of next year. They're in pole position. They may lose unit market share, but value market share in terms of AI, we think grows. Very good situation, but we would not be, trading ahead of the quarter. Very volatile situation.
Very volatile, Hans. So, bottom line, when they report this week, what do you expect, Hans? What are you watching for?
Yeah, so we're going to look for, we think, a modest beat, a modest guide up relative to expectations. I think the street got a little ahead of themselves. We're in a transition, right? Hopper is the current generation is growing, but at a moderating pace. Blackwell really a quarter ahead where you see the inflection. So where you're looking for, obviously, top line guidance, overall demand picture for next year, gross margins, very important to see how this ramp is going to impact margins, and the street will focus on that as well. We think everything is okay, but we'll have to wait and see. So margins, top line, and the overall health of Blackwell is something that the street is going to be focused on.
Hans, another of your colleagues on the street has an expectation for 100,000 Blackwell GPUs to have been shipped in the fiscal fourth quarter. What's your estimate, and is that a number that you're sort of looking for?
Yeah, I think that's in the realm of possibilities. That's really an unconstrained type of number. The issue for them and for the company for next calendar year is that they're constrained. And so hitting that number or not doesn't necessarily mean that they're faltering. It's just that demand is very, very strong, and the yields are not healthy enough quite yet for them to meet all of that true end demand. So I think that number is realistic, but can they do that? It might be a bit of a stretch, but that's the way I would look at it.
What any worries about supply constraints, Hans, as you head into 25 when Jensen's out there telling press that Blackwell demand is insane, I think is how he put it?
Yeah, I think that's true. And it's interesting because Hopper, the current generation, was insane, and Blackwell is even more insane, if you wanted to use that terminology. The issue is that there are constraints. The product is very, very tough to manufacture. They tend to sell more at the rack level. And there are tens of thousands of components that are going on there. But yeah, I would say that the demand picture is insane and will continue through next year. The issue is supply. How can you get the supply of the components, the supply of the wafers, the yields, and so on. So it's a little tricky here into the print. And again, we would be a little more cautious into the print because of the volatility. But from a secular perspective, NVIDIA is our best idea without a doubt.
And also, when you talk about the volatility going into the print, again, one of your peers on the street talked about that there's a lot of money that is poured into NVIDIA without necessarily understanding the fundamental dynamics that drive the chip sector, the cycles, et cetera. Does that make it more vulnerable to that kind of volatility that you're talking about?
Yeah, I think so. We have cycles within cycles. And so we think the AI, we call it the mother of all cycles. This is a secular dynamic, is in the early stages. And a lot of the business that NVIDIA does today is still related to training of AI models, not inference. Nobody makes money training. You make money with inferencing or production. So we're at the early stages. And so there is some confusion regarding that. But we think that the stock will work very nicely for investors as we look into the next year, as we move more and more to inference, production, making money, return on investment. That's how you make money here.
Hans, always good to see you and have you on the show. Thanks for joining us.
You got it.
Coming up, it's the latest edition of our series, Goodbye or Goodbye. Stick around, much more market domination still to come.
It's a big, noisy universe of stocks out there. Welcome to Goodbye or Goodbye. Our goal to help cut through that noise, to navigate the best moves for your portfolio. And today we're looking at the semiconductor industry. We're all awaiting Nvidia gearing up to report its third quarter results this week. I'm here with Spear Invest founder and CIO Ivana Delevska. And we're not talking about Nvidia, we're talking about other chip stocks today. There is a universe beyond Nvidia, of course. And your buy stock is Marvell Technology. Now, it actually was your buy stock back in March as well when we spoke to you. And at that point, the stock had sort of a nice little run. Then it came down. Now it's going up again. So the stock is up 47% year to date. It's up about 14%, I believe, since you came on with us. So let's go through why you still like this one. First of all, you say it's benefiting from the boom in custom designed GPUs. Is that related to AI, or is it just generally we're seeing that kind of a trend?
So thanks for having me, Julie. This is specifically related to AI, and basically as we get further into the cycle, all the hyperscalers are designing their own chips and competing with Nvidia. So Microsoft will have their own chip, Amazon is really far along the line, and that's who is Marvell working with. Google has their own TPU, so we think that as we get further into the cycle, custom chips will gain a significant part of the pie here.
And you think Marvell will take a lot of that share in that particular market?
The two players are Marvell and Broadcom. I think they're both well positioned to benefit, but Marvell is just a smaller company, so it will be just a bigger piece of their revenue base.
Gotcha. And you say also that they're a leader in networking interconnects. Now, first of all, explain to people what networking interconnects are.
So networking, Julie, just to give people some background, is a pretty big and important market adjacent to the chips side. So basically, this is all kinds of like connections, switches, cabling that goes side by side with the GPUs. And this is actually where we're seeing a lot of the performance improvement coming from. So if you look at the new Blackwell chip, it is two Hopper chips connected together. So the way you're connecting these chips and optimizing the network is really going to be key in getting performance improvement. Marvell specifically is a leader in interconnects. This is a smaller part of the market, but they have a very high market share, and they're entering in some of the other parts of networking as well.
Gotcha. All right, and let's talk about another market that they're in, or other markets that they're entering into within networking here. You've got, again, you're going to have to explain it to us, active electrical cables. So what does that mean?
So active electrical cables are basically versus optical cables. They're able to work with higher speeds and work inside these chips. So they're really a new area that is kind of born as part of AI, that they're part of it as we look further.
So basically all part of the AI chip ecosystem, if you will.
That's right.
We see a big increase there. Okay, so you know we like to talk about what could potentially go wrong, so or risk here. In the case of Marvell, a digestion period maybe in AI investments, and we've seen sort of fits and starts of that from a market approach this year thus far, where we kind of see the AI stocks run up and then pull back a little bit.
That's right. So we're seeing the market react to it, but we haven't really seen it fundamentally. So people are still ordering chips at higher levels than they were last year. The Blackwell numbers are going to come in very strong, we believe, on Wednesday. So we haven't really seen a fundamental slowdown. The question becomes, after Blackwell, when the next generation of chips comes, is there going to be as strong demand, or are we going to go through a period where people kind of learn and tinker with Blackwell and see what they can build on top of it? And this would be a downside case, or would create a prolonged period of time where we are going to see some sort of a stagnation in we're not seeing it yet, we're not seeing any signs of it yet, but this would be something that we're closely watching.
And then the stock that you do not like as much is ASML, which is a chip equipment maker. That stock is down about 7.5% year to date. So you would think if the chip industry is growing as it has been, that the chip equipment would be growing, but that hasn't really been the case. Why not? What's going on here?
So that's right, Julie. So we've seen a bifurcation here between the chip sector and the chip equipment sector. For chip equipment, we already went through a pretty massive CapEx cycle. So companies like Micron, TSMC already invested, and all of the new build as a result of the CHIPS Act, all of those have not been built yet, but are in the company's backlog already, right? So in order for us to see acceleration in the numbers for ASML, you would need to see new plant announcements rather than what's been announced to date.
Gotcha. And, China's a big market for this company. But of course, there are some political headwinds there.
That's right. So China represented as much as 49% of revenues at some point earlier this year. With the restrictions, that's now down to close to the 30s. So we believe that basically that's going to continue to decline as we face further restrictions.
Right, and there already are some restrictions that are in place, but what do you think are sort of the further risks that could happen as a result of the election and the policies that might get put in place?
Well, I think the environment is going to get a lot more restrictive. Right now, the company is still able to export to China. They just need to get export licenses, and they're restricted in the high end of the chip side. So if restrictions get even stricter, we're going to see a potential of local Chinese players entering the market, which would be a long-term concern for their dominant position. So this is not something, it's not a bad company, but it's something where you want to be watching it through the down cycle and finding a better entry point than where it is today.
Well, and we did see some people coming into the stock recently because they reaffirmed their sort of longer-term 2030 forecast. So I guess that brings me to what could go right for them as you look over the longer term.
So what we're looking in terms of what can go right is some of these markets that are oversupplied, like memory. We're trying to see when those come to balance. As these companies are converting a lot of their traditional memory supply to AI, at some point in the next 2 to 3 years, they're going to need more capacity. So we're looking for data points of when that actually happens. For now, we're not seeing it just yet. Same thing on the logic side. TSMC had invested quite a bit of money in adding capacity. Their capacity will grow next year, but the extent to how much it will grow, that's a big question mark. And Intel as well, we know that they're struggling, right? So when they turn around and they start investing, that would be another catalyst for them.
Ivana, let me ask you, because not just chip equipment, but chips generally tend to be very cyclical. How do you know when in the cycle to buy? In other words, if you're anticipating, for example, that the chip equipment market for ASML is going to turn up in 6 months, in 12 months, when do you want to be buying?
So you want to be buying basically when you start seeing book to bill start exceeding 1. So if the company is booking more business than they're actually billing, that's a pretty big positive sign. ASML specifically booked something like $2.6 billion in the quarter when the market was expecting $5 billion. So that's a pretty big red flag. So you're looking for those bookings numbers to accelerate and book to bill to start exceeding or approaching 1.
Gotcha. Really helpful stuff. Ivana, thank you so much. Good to see you. And thank you so much for watching Goodbye or Goodbye. We'll bring you new episodes at 3:30 p.m. Eastern.
All right, take a look at shares of Trump Media and Technology Group and Bakkt. These headlines are just dropping here. Donald Trump's social media company in advanced talks to buy Bakkt. This is per the FT. They are citing sources. Bakkt is a cryptocurrency trading venue owned by Intercontinental Exchange. Valuation under discussion, Julie. It doesn't sound like is immediately clear here, but TMTG, which owns, of course, operates through social, we have talked a lot about, generates a ton of headlines, doesn't have much in the way of revenue, does have, though, a multi-billion-dollar equity valuation. So if management were so inclined, they do have a currency they could go shopping with.
I mean, this is just fascinating to me from a number of different angles, because first of all, you've got the Trump name on Trump Media and Technology. It doesn't have anything directly to do with crypto, right? So this would be entering a new business. But you also have someone who is the president of the United States, whose name is on the company, who has said he is going to be supportive of the crypto industry. So now he's putting his money where his mouth is, maybe, if this goes through. But then, are there no conflicts of interest because of that? If he's going to be making policy that is going to affect the crypto industry, but now he's in the crypto industry? Like, I don't know the answers to any of these things, but it is a remarkable report to see, given all of that. I will say, I'm going to say it, Bakkt has high short interest. So when you see a pop like this, there are also some political overlapping here because, for example, Bakkt's first CEO was Kelly Loeffler, who worked at ICE as well, is married to Jeffrey Sprecher as well, ICE chairman. So you've got, and she was also a Georgia senator. So there, there's just a lot of
A lot of webs.
tendrils, webs. That's the word.
It
I'm
does
looking for.
deepen Trump's move, though, right, in cryptocurrency. I mean, he started promoting the new crypto venture with his partners, World Liberty Financial, so that's interesting. And then just broadly in crypto markets, we've talked about this, they have soared since November 5th on this hope that, listen, they now have a stronger ally inside the White House.
And Bitcoin took a leg up on this also.
Interesting. All right, moving on. Builder sentiment improved for the third straight month, with builders expecting market and regulatory conditions to keep improving now that Republicans have won control of both the White House and Congress. And joining us now to discuss all of this is Jim Tobin, National Association of Home Builders CEO. Jim, always great to see you and on set.
Great to be with you.
I don't think we've spoken, Jim, since the election, so I'd like to start there. You know, Trump is moving back into the White House. Walk us through, what does this mean for your industry, for your members, Jim?
Well, I think past his prologue, the first 4 years of Trump's first term, I think we saw an accelerating economy. We saw a great housing market. Obviously, low interest rates helped with that. And I expect that that's what we'll see. President-elect Trump is inheriting an improving economy. I think we're going to see an acceleration where interest rates are going to go down, economic growth is going to move up, and I'm really hopeful that we will see a president who talked about building more housing as a key of his, or the central part of his economic pitch, to continue to talk about that and find ways for us to let builders build, quite frankly.
Now, then candidate Kamala Harris, Vice President Kamala Harris, had sort of specific plans around trying to increase supply and also incentivize buying. What are President-elect Trump's specific plans around supply? Does he have any?
Well, I think number one, a lower regulatory environment. 25%, 24% of the cost of a newly constructed single-family home is embedded in regulation at the local, state, and federal level. Same thing for multifamily. It's about 41% for an apartment.
Sorry if I may. What's that split, though? Because that's pretty important, right?
Sure.
Between federal, local, and state. Because my understanding is that a lot of it is on the more state and local level.
You're going to see the bulk of that because of land use policies, in particular permitting. You're going to see a lot of that at the local level. But the federal government has a role to play there, too, with Clean Water Act or ESA regulations, energy requirements that came in because of the IRA. So there are a lot of things the federal government can do, including President Trump can do, to roll back the federal portion of that as well. But as far as his policies, he talked a lot about opening up federal lands. That's going to make a bigger deal out west. Utah, Arizona, Nevada, certainly areas where the federal government owns an outsized share of land out there. Suburban Las Vegas. There's a way to lower land prices by the federal government offering those lands for a lower cost, perhaps to bid. But I also think that he's talking about lowering interest rates. As much as that's in his control, I think that helps spur economic growth and housing.
Let me ask you, there was a really interesting interview I heard Senator Vance do. It was about a month ago or so, and your industry came up. And the conversation was about housing and illegal aliens. And the host asked him, well, what if you're really serious about mass deportation, Senator Vance, who's going to build the homes? And Vance's response was, listen, there are millions of prime-age men and women who've dropped out of the labor force. And he used the word re-engage. He said the home builders in this country, the housing industry country, they have to re-engage those Americans. What do you make of that?
If we can re-engage those Americans, I think we'd be in great shape. The hard part we've had since really the 1970s is convincing people to go into the skilled trades, whether it's kids coming out of high school as an alternative to a four-year college degree. Remember, from the 70s on, we've been telling people the only way to be successful in this country is to have a four-year degree. That has changed in the last decade, I would say. More people with student loan debt, whether you can get a job out of college. I think people are looking at the trades again. We would be thrilled if we could attract kids, adults, any population.
Does that mean, though, Jim, that the industry is going to have to rethink pay, benefits, incentives?
Our industry pays a very good wage. So let me just say that. It's not a minimum wage job by any. We're talking about skilled individuals. It takes 25 different trades to build a home. These are skilled people, men and women, whether it's carpentry, whether it's foundations, drywall. That's what we have to remind people, that you can earn, not only you can earn a great wage, but it's a great career option.
So even if that's the case, that you are able to convince more people, a broader swath of the U.S. population, they could do that, that's going to take time. If we are entering into, say, a 12-month or 24-month period where we are going to see mass deportations, and you're not able to make, what effect is that going to have on your industry?
It could have a chilling effect on the industry. About 30%, 31% of the skilled trades, the subcontractors that we use, is immigrant labor.
Do we know how much of that is illegal versus legal?
I don't. But I know that when it's regardless of whether illegal or illegal, you're talking about a large percentage of the workforce. If people get scared and they leave the workplace, it's going to drive up labor costs, and it's going to drive up the time it takes to build a home or a multifamily apartment. So that's the challenge that we have. We'll see how the president. I take the president at his word. I also know that we need to get our border in control. So there's a lot of ways that we're going to move forward here over the next several months with the transition team and the new administration. But I'm hopeful that the president is a builder. He understands what it's like to sign the front of the check. I think he understands that labor is an important component of building homes. And so I'm hopeful that he will look and take steps of how we're going to deal with the immigration crisis.
Jim, the very fact the election has come and gone, that uncertainty's gone, it's been kind of clearing event, is that in and of itself a kind of potential positive for the industry?
Yeah, so I travel all over the country. In the last 3 months, everywhere I go, didn't matter what market, blue state, red state, high market, low market, didn't matter. The market just kind of got really constricted over the last 3 months. And I really believe it had to do, well, interest rates were at peaked at that point. But two, there was just an election uncertainty. There were a lot of people wondering, okay, who's going to be the champion of the economy moving forward? Who's going to be in control for the next 4 years? In fact, our HMI, our NHB Wells Fargo HMI went up three points today. But if you look at the respondents after Election Day, the rate almost jumped 7%. There's a lot of optimism in the industry, and I think that with the election over, there's going to be people are going to feel more comfortable moving back into the housing space, but our builders are going to feel more comfortable about moving into those projects for next year.
Jim, always great to see you.
Great to be
Thanks
here.
for stopping
Thank
by.
you. Thanks.
Coming up, calls the day when market domination returns.
Robinhood shares on the move today as Needham upgrades the stock from hold to buy, as Donald Trump's victory is seen as a positive catalyst for the stock. Joining us now, the analyst behind the call, John Todaro. He's a senior analyst at Needham. John, it's good to see you here. So walk us through, you say that you expect some changes coming from the Securities and Exchange Commission that then could directly benefit Robinhood. Walk us through what you expect and what it could do for the company.
Yeah, sure. So Robinhood's going to benefit here. We view it in two ways. One, the pro-crypto regulation that's coming, and one that's just changes at the SEC, and then also the broader positive regulation from the Trump administration. And so I think what is important within that, though, is for folks to realize that you're really kind of getting two turns of the wheel in terms of positive regulation. You're going from an administration that was restrictive or maybe even anti-crypto to not only one that's neutral, but actually pro-crypto. So it is a bigger jump than I think a lot of investors initially realized on the election win. So that's point number one. Point number two, with what's expected to be a new SEC chair, we believe Robinhood will come out and launch a number of different crypto products. This allows them to take some low-hanging market share fruit within that. And then also a key point of those crypto asset listings, we expect Robinhood to launch a lot more meme tokens. And that is a part of the crypto economy that's been growing a lot. Meme crypto assets are traded about 3 to 5 times more than large cap crypto assets. So we do think platforms that can launch trading pairs within that should see outsized volume. And we all remember in 2021 when Robinhood had GameStop and AMC, and they saw a lot of volume from meme stocks. We think they could do the same thing within crypto.
John, when you say you expect this administration to be more, generally pro-crypto, just spell that out for me, John. What does that mean, just in terms of actual specific policy you might expect?
The biggest one is going to be changes at the SEC. So I think kind of front runners right now would be Hester Pierce, who's a current commissioner. She would obviously be very favorable for the crypto industry, or Dan Gallagher, who's the current chief legal officer at Robinhood. So either one of those would be very positive for crypto. And then the other pieces, you could see stablecoin legislation that gets done. That would be down the road. That would be positive for crypto broadly. But what we think the biggest thing near term is just the changes at the SEC. And that's where Robinhood's going to be able to capture most of the low-hanging fruit. The down the road legislation, that's a positive that is more likely to get done now with Republican control in Congress. But the main part is those SEC changes.
And there's also a report now in the Wall Street Journal that Brian Armstrong, the CEO of Coinbase, is set to meet with President-elect Donald Trump potentially today, that they're going to be talking about the SEC. According to the Journal, Armstrong's pick is Hester Pierce, who was a Trump SEC commissioner, to head up the agency. How big would that pick in particular be if it did indeed end up being Pierce?
Yeah, well, exactly right. That's one of the names I just mentioned. And I think if she is picked, that would be very positive for crypto. We put out a note recently, right after the Trump election, where we diagrammed a wish list of kind of pieces getting done. And one of them was Commissioner Pierce getting appointed. I actually don't think you could have a more pro-crypto person who obviously also understands securities laws and the markets. So I think she would be pick number one, if you will.
John, Bitcoin, of course, hyper volatile asset, a great 2024. I'm just curious, what do you see ahead, John, in 2025?
Yeah, it's a good question. So Bitcoin's obviously had a really good year. We've despite what a lot of people might think, we've basically been in a Bitcoin bull market for almost 2.5 years now. I believe the bottom marked with the FTX collapse in 2022. So you've had 2+ years of steady Bitcoin growth. You obviously saw the ETFs. So a lot of activity has come back into Bitcoin. We're kind of, I don't think necessarily early stages of a bull market, because it has been going for some time. But what I would say is retail investors are just now starting to come back into crypto. Volumes are still much lower than they were in 2021. So while there are parts of the crypto ecosystem that are definitely showing some signs of frothiness and euphoria, I would say we're still very pale, if you will, in comparison to what 2021 was. So if you get the interest rate cuts more than expected, or at least on the level as expected, you're gonna, in our view, still see more capital go into crypto. And then you have this pro-crypto administration, couple that with kind of the SEC changes we talked about. I think you have a nice setup for crypto in 2025, but we do think Bitcoin and crypto, it still follows a cyclical pattern. We still think there's going to be tops and bottoms. We still think there's going to be, a lot of euphoria that leads in most cases for these assets into kind of a blow off top. So we do still expect drawdowns and volatility. We don't think it's kind of off to the races and you won't ever see a drawdown again. But we do like the setup at least for kind of the next 3 to 6 months.
How closely do you think the stocks that you cover are going to track with Bitcoin? In other words, if you do see that, traditionally when we see that kind of pullback, the stocks pull back also. Are they broadening their businesses enough to sort of weather those ups and downs?
Robinhood definitely is. So Robinhood still has a very core equity margin business. They launched some recent advanced products, including indexed assets and futures. So that segment of the business isn't going to be that correlated with crypto unless you saw, geopolitical concerns or a macro washing out that impacted both crypto and equities. But if not, if it's just a crypto drawdown, 50-60% plus of Robinhood's business is going to be fine and it could even be growing, right? So Robinhood's definitely, diversified enough where any drawdown, especially in one particular crypto asset, wouldn't really impact the business too much. Coinbase, less so than Robinhood, right? They're mostly kind of all in on crypto. They do have a big interest income book, though, where they generate a lot of revenue from USDC, that stable coin. That's less volatile than trading activity. So you are still, even Coinbase is buffered a bit by this big kind of stable coin business, which generates an attractive amount of interest income. And that's pretty stable as long as, interest rates are where they are. And that also hedges the business too, because if you get interest rate cuts, you probably get the trading business that goes up, but then you lose some on the USDC side. So that's a little bit hedged, but I would say, Coinbase is going to be more volatile in our view than Robinhood, and that's because it's more levered to volatile crypto assets.
John, thank you so much for your time and those picks. Appreciate it.
Thanks for having me on, guys.
And while we're wrapping up today's market domination, don't go anywhere. We've got you covered with all the action. Following the closing bell, stay tuned for Market Domination Overtime.
There's the closing bell on Wall Street, and now it's market domination overtime. We're joined by Jared Blickery to get you up to speed on the action from today's session. Let's start with the major averages, see where they ended the day. Pretty much where we saw them about an hour ago, with the Dow down about 55 points, 0.2% or so. So mixed picture here, because the S&P finishing up by about 0.4%, and the Nasdaq up about 0.6%. So we sort of see the digestion of the so-called Trump trade, if you will. Investors, after the post-election rally and then the come down last week, now trying to figure out kind of where things go next. So that's kind of where that leaves us today. The Russell 2000, which a lot of investors have been following very closely, finishing the day higher modestly, about 0.25%. That's a place that a lot of people have been telling us they like in this environment. So we'll continue to watch that as well. And we saw a mixed picture within large cap tech today as well, which was interesting. Jared, you've got more details on what we saw in today's session.
Well, thank you. I was just looking at the S&P 600. Now, the Russell 2000 was positive. The 600 measured differently, 600 companies instead of 2,000, but that finished just barely in the red. I don't know that it means anything, but it was kind of a low volatility, low volume day anyway. So we're not getting a lot of informed reactions with respect to price action. Now, I will say the VIX came down a little bit. Let me just show you a 2-month chart so you can see some of the peaks and valleys. And we're just coming off of one of these valleys here. Looks like there we go. Well, charts are a little slow here, so I'm going to go straight to our heat maps and see if we can dial up some sector action. Everything but industrials was in the green today. Industrials just barely red. Energy taking the pole position, up 1.3%. XLC, that's communication services, and consumer discretionary, two mega cap sectors. Those were in the top three as well. And let's check out our leaders. We see ARK Innovation, ARKK, that takes the top spot. That was up 3%, followed by Korean stocks. That's a Korean ETF, EWY. KWeb is China. PSEE is small oil. And SOX is a chip stocks. And let's just check out the ARK Innovation components. And we can see Tesla, probably the biggest driver. That was up 5.6%, but don't count out Coinbase. Coinbase up 6%, Square up 7%, Hood up 8%. So a pretty decent day. We did see some red in Shopify and Zoom and Twilio, but for the most part, seeing more green than red there. And I did mention semiconductors, aside from Nvidia and ARM and maybe one more or two more, pretty constructive day. Texas Instruments up 3%, so was AMD. Of course, we're looking for those Nvidia earnings later this week. And I will end on the Nasdaq 100. Looks like Tesla, back to Tesla, probably takes the top spot there. And then also looking at FANG, that is up 3%. But aside from Nvidia, the down 1%, the mega caps having a pretty good constructive day, guys.
Thank you, Jared. A mixed picture to start the week on Wall Street. Tech stocks were the standout as Tesla got a boost from a report that the Trump administration is looking to relax self-driving rules. But the broader rally after the election fizzling out, raising the question whether there's more room to run. Joining us now is Phil Orlando, Federated Hermes Chief Market Strategist. Phil, it is good to see you. So maybe, Phil, we'll start the setup this week. Relatively light economic calendar, but big earnings on deck with Nvidia. Just taking a step back, Phil, I'm interested to get your take. What did you make of the earnings season we just got through here, Phil? Your big takeaways, and what are your expectations for corporate profit growth as we head into 2025?
So the earnings season's been pretty good. We're, probably 85 or 90% of the way through. The expectations going into the third quarter is that revenues and earnings would be up maybe about 4.5% or so year on year. And we've done better. Revenues up about 5.5%, earnings up about 6.5%. So I think in that sense, it's been a success, but not quite as strong as the second quarter where earnings, for example, were up about 11% or so. Now, as we look out longer term, one of the things we've got to consider is that there's a new sheriff in town, and that starting in January of next year, we will have a new government. And the fact that there is a red wave with the potential for some significant tax changes by the end of calendar 25, which is the extension and permanence of the 2017 tax cuts, has significant implications for us later in the cycle. So it'll probably take a year or two for all of that to work through. But our thinking is that as we get into calendar 27, we could be looking at earnings of $350 on the S&P 500. Putting an appropriate multiple on that, that would give us a target price in calendar 26 of about 7,500. Discounting that back to calendar 25, then that would suggest a target price next year of about 7,000, and discounting it back to this year, that would give you a target price of about 6,200. The S&P was at about the 6,000 level, last week, so we've got a little bit more juice to the upside. But the point is that the rally that the markets enjoyed from, let's call it early to mid-August into the election, or a week past the election, appears to be justified based upon the expectations of stronger economic growth.
Phil, really interesting there, and sort of in line with some of the other bulls that we've been talking about on the market, not just for this year, but for next year. Ed Yardeni, for example, has a 7,000 target for the end of next year. And your point about tax policy is well taken. What about all the other stuff, though? And all of those sort of cross currents that the market is now trying to puzzle through, that we really won't know the answer to, not a month from now, not on January 20th even, likely either, but things that are going to play out over the next year.
Well, it's a fair point. There's a lot that we don't know. The president-elect is in the process of trying to put together his cabinet. As you know, Julie, you've been doing this a long time, like I have, that personnel is policy. And to a significant degree, the individuals who take some of the key jobs, like Treasury, for example, that's going to dictate what is the administration going to propose in terms of tax policy. Now, the one positive we know from the Republican standpoint is that we know that the Senate and the House will have modest Republican majorities. So if they're able to keep their coalitions together, then we have the potential to get some positive tax policy. But to your point, some of the one-offs that we were hearing during the campaign, no taxes on tips, no taxes on Social Security, no taxes or the deduction of interest payments on cars. I don't know if any or all of that sort of stuff is going to make it through the legislation. What we're hoping to see is that the cut in corporate tax rates from 36% in 2017 to 21% currently, we're hopeful that that stays in place, and we're hopeful that there's an extension and a permanence of the individual tax cuts and possibly some improvement on the SALT deductions. For those of us that live in high tax states, getting that increase from 10,000, say, to 20 or 30,000 means significantly that we've got the ability to save more, invest more, spend more, and ultimately that's good for the markets and the economy.
Phil, separately, a sentiment question for you. When you see a headline like this, Phil, in the Journal, quote, investors are betting on a market melt-up, is that a cause of concern for you, Phil?
Well, I think the headline writer may have taken a long summer vacation. We had the market melt-up. The S&P 500 in early August was down about 10% over the course of late June, July, beginning of August. And then depending upon the index, stocks are up 20% or so from early August into mid-November. We've seen a little bit of consolidation the last couple of days because of some concern about the Federal Reserve's policies going forward. But, I'd like to think that the market has already seen the melt-up. Now, I didn't read the article, but if the Wall Street Journal is implying that the time reference of their melt-up is the next couple of years, then we would certainly agree. As I said, our target price, fully discounting the end of calendar 26, right, 2 years from now, is for a 7,500 S&P 500. So the market could go from 6,000 now to 7,500 2 years from now, and that's pretty good. But we've already had a 20% rally in the last couple of months.
Yeah, any way you slice it, your targets would place us in pretty good place if you're a bull in this market, Phil. Good to see you. Thanks a lot for joining us.
Julie, thanks for having me on. Happy Thanksgiving to you.
And to you. Take care of yourself.
Take care.
Well, President-elect Donald Trump sparking debate over his picks for his new administration, particularly the public drama surrounding candidates for the next Treasury Secretary. But as the new administration takes shape, there may be optimism on what Trump's presidency can bring. Apollo CEO Mark Rowan, who is reportedly on Trump's shortlist for Treasury Secretary, sat down with our executive editor Brian Stasi last week at Invest, and he was asked about the opportunities that a Trump administration could provide.
I look at the people who he is surrounding himself with, and I come away very optimistic. I think this administration has a remarkable chance to really pivot the country, to take advantage of all the inherent positives that we have. I mean, imagine how powerful it would be if we actually got our act together and were well governed. It's truly unbelievable what we can do.
Here with more on the latest in Trump's cabinet picks is Yahoo Finance's Ben Worschel. And of course, that answer can be seen maybe in a little bit of a different light now, Ben.
Yeah, so by a lot of measures, actually, Trump is far ahead on his cabinet picks overall. He's done 12 cabinet level officials in 12 days, which is very fast. The clear laggard, and the reason we're so focused on it, is the economic folks are behind on this. And the reason Treasury is getting so much attention right now is because it's being taken by a signal, both by folks here in Washington and by, I think, the markets overall, of what direction Trump's economic policy could take here. So two new candidates kind of have risen in the last couple of weeks. Rowan, who we just heard, but also Kevin Warsh, who's a former Fed governor and is expected to meet with Trump this week, as is Rowan. And then that joins two other candidates who have been in the mix before: Scott Bessent, the former Soros investing chief, and Cantor Fitzgerald CEO Howard Lutnick. So those are the kind of four we're talking about right now as in the mix of this, but Trump being Trump, it could kind of go a lot of different directions. And you're seeing these folks kind of both publicly in a way that's different from other cabinet picks, but also privately with Trump, trying to make their case for why they could be the messenger for him going forward.
What do you think, Ben, broad strokes, he wants in a Treasury Secretary? What's he looking for? I mean, I would imagine, he doesn't want. I would imagine he wants to reassure Wall Street. Trump doesn't want to upset, I wouldn't think, to rattle the market. It's one of those gauges he seems to judge his success by. Is it that? Is it, they have to be aligned on trade policy? What do you think he's looking for?
I think it's a combination of those. I think that's part of why this pick is so challenging. He definitely doesn't want to spook the markets. That's Trump's history. That's what people around him sort of are talking about right now as a sort of priority number one. The second one, which may or may not be reconcilable with the first one, is to be able to credibly defend tariffs, because what Trump has given a signal of is that he's going to go ahead with his tariff ideas that he talked about on the campaign. And so these officials' records on trade are a big one there. The third one, I think, as the previous guest alluded to, was tax policy. This Treasury Secretary needs to be they're going to be the ones at the negotiating table for this in a big way. And so they're going to want to be at the center of that too. So it's part of what's making this challenge is that this is a very complicated job, even more complicated than normal, perhaps.
Ben, great to see you. Thanks for joining us.
Good to see you.
And coming up, oil ticks higher as tensions escalate between Russia and Ukraine. More when market domination overtime returns.
Bitcoin's post-election tear just keeps on going, with President-elect Donald Trump's crypto-friendly policies sending the asset higher. As Bitcoin keeps climbing, so do crypto ETFs, making it easier, more attractive potentially for more cautious investors to get involved. Joining us now, Robbie Mitchnick, BlackRock head of digital assets. And among the crypto ETFs that have been introduced, the BlackRock offering has been enormously successful, drawing just a lot of money into it in a short period of time. It's up something like $13 billion in flows since the election. What is going on, Robbie? Is it just, I mean, we know that crypto trades on vibes a lot, and the vibes right now are pretty good.
They are pretty good. Julie, Josh, thanks for having me on. I think, obviously, the election and the sort of confidence and optimism that the market has had coming out of that for Bitcoin and crypto is a part of it. I also think, frankly, 2024 was probably a tough year for Bitcoin x the ETFs happening because you had the confluence of higher interest rates for longer than was expected. You had 4 bankruptcy liquidations that were a decade in the making that have been sort of constant selling pressure in the market. That was sort of offset by the new access that the ETFs had created. So now for the first time, we're seeing a catalyst, a fundamental catalyst, and we're not having any more of that sort of bankruptcy liquidation overhang. And you put all that together, you've seen the results in the market.
So Trump runs as clearly, Robbie's a friend of crypto, right? So the feeling is now you have a real ally in the White House. And he made a series of different promises and pledges on the campaign trail. Do you have a sense of what you think the industry would like him to prioritize?
Well, I think the big thing that folks are focused on is this idea of a strategic Bitcoin reserve. I don't know whether that's going to happen or not. I think one of the really important signaling things that he did from a Bitcoin perspective was that the roughly 200,000 Bitcoin that the U.S. government still holds, that would not be sold because that was an overhang that existed in the market for a long time. Who knows what happens on the actual strategic Bitcoin reserve piece?
So because we have seen this rally partially on hopes around a better regulatory framework, what have you, and there was a report today, for example, that President-elect Trump is meeting with Brian Armstrong, the CEO of Coinbase, to discuss who could head up the SEC. What kind of room is there for disappointment? In other words, if it's not the pick that the industry wants for the SEC, if the Bitcoin reserve only holds and doesn't buy more, are these potentially things that will take Bitcoin down?
Maybe. I think the fun thing about this market is it's pretty inefficient sometimes. And people and investors of all stripes are trying to figure out how to think about valuation, how to price in different catalysts, different risks, et cetera. And I don't think that's particularly well understood at all by a lot of the market today. And that's why we think about our role at BlackRock and how we think about it. It's very much investor education focused around IBIT, around Bitcoin, around these products, because there is, I think, a gap in understanding of how to think about different developments, how to think about macroeconomic interplay, how to think about Bitcoin in a portfolio.
That's and when you're talking about, when you're engaged in that kind of education, what do you say? What is the role?
Yeah, well, we think that there's been a kind of misconception that's frankly been perpetuated by a lot of crypto research and other publications characterizing Bitcoin as a risk-on asset. Bitcoin is very clearly a risky asset, right? It's volatile, it's relatively new and unproven still. For a long time, it's faced regulatory uncertainty, but that's a different concept from being risk-on, which implies that you're supposed to correlate and go up and down with equities. Fundamentally, the risks and return drivers of Bitcoin are very different from what they are of equities and most other so-called risk-on assets. And understanding that distinction is absolutely critical for most institutional investors and for wealth advisors, because it totally changes the role that it can play in a portfolio. If it is uncorrelated, which fundamentally kind of suggests it is, that's where you get this potential for it as a diversifier and even as a potential hedge against some of the macro risks that exist, some of the U.S. fiscal sustainability concerns around the world, fears of inflation, monetary debasement, et cetera.
So that's the reason to hold it in a portfolio.
Well, that's increasingly what a lot of investors are focused on.
And when you're talking about the increasing ownership of Bitcoin, in part through the ETFs that BlackRock provides, can that kind of ownership survive the next crypto winter? In other words, do you think that the investor base now is sort of committed enough and more solid in that you will see that stability and maybe even will create less volatility going forward?
I think it could. And the early evidence suggests that that may in fact be the case because we have seen very few days of outflows from IBIT. So even on days where Bitcoin has dumped over the last year, we've seen in some cases, net zero flows. In other cases, we've actually seen creations. You look at a day like August the 5th, if you remember that, your Japanese yen carry trade based move in the market. Bitcoin sort of flash crashed. And so lots of selling pressure in spot Bitcoin markets. We actually had net creations into IBIT. So investors said, this is sort of an irrational short-term price move. And that seems to be more the investor base for these ETFs is more sort of fundamental long-term buy and holders.
Robbie, I'm also curious. So you guys have the Bitcoin product. Actually, you have IBIT. You have an Ethereum product as well. Any talk of expanding that, whether it's other types of Bitcoin derivative ETF products or into other types of crypto?
Yeah, well, I think we're constantly evaluating how the space changes, how the regulatory environment changes, how our client needs and interests change. That got us to where we are today. I think right now, mostly what our clients are focused on is Bitcoin Clear, number one, ETH a little bit, number two, and frankly, not a ton for the longer tail of other crypto assets. As that evolves and as other factors evolve, we'll see how that plays out in terms of our product lineup.
All right, Robbie, great to have you on set. Appreciate it.
Thanks for having me.
Turning now to commodities, the Biden administration reportedly gave Ukraine the okay to use U.S. long-range missiles to strike Russia. The decision, first reported by Reuters, stoking fear of a wider conflict and putting the war premium back in the oil market today. And joining us now to discuss is Yahoo Finance's Inez Ferre. Inez.
Yeah, Josh, and oil was up this morning after reports that the Biden administration had authorized those U.S.-made long missiles to go deep into Russia in the Ukraine-Russia war. And that's seen by the crude market as an escalation, which could send futures even higher if we see big casualties or the war escalates even further. So you have seen oil pushing up higher. Also, the markets today got news of a production halt in Norway's largest producing oil field. And that region is important because a disruption there would indicate some tightening supply in the North Sea crude market. So you saw WTI today gaining more than 3%. Brent crude also adding more than 3% or more than $2 per barrel. And we're looking at Brent at around $73 per barrel and WTI at around just below $70 per barrel. I do also want to mention one other catalyst, and that is the U.S. dollar index, because we saw that as the U.S. dollar index has been going higher since the election results, we have seen that oil has been under pressure quite a bit. And if we just take a look, though, today, we have seen a little bit of the easing or a pause in that rally in the U.S. dollar. And so that's supportive of higher oil prices. But I just want to pull out a 3-month chart so you can see some of the trading range that we've seen for crude oil. So it's been volatile throughout the last several weeks, guys.
All right. Thank you, Inez.
Thank you.
Time now for What to Watch, Tuesday, November 19th. Starting off on the earnings front, we'll be getting some key reports from retailers tomorrow with Walmart and Lowe's. Walmart announcing results for the third quarter before the opening bell. Analysts expecting the company's sales to increase on the back of recent adverse weather events and a solid back-to-school season.
Moving over to housing, monthly data for housing starts and building permits are due at 8:30 a.m. Eastern. Economists forecast housing starts will dip slightly to 1.34 million, while building permits could tick up to 1.44 million. That data coming after homebuilder confidence came in better than expected today, giving us more insight into a sluggish housing market.
And taking a look at the Fed, we'll be getting some commentary from Chicago Fed President Austin Goolsbee in the afternoon. This coming after comments from Fed Chair Jerome Powell last week. Powell saying, remember, that the economy isn't sending any signals that the Fed needs to hurry to lower interest rates.
That'll do it for today's Market Domination Overtime. Be sure to come back tomorrow at 3 p.m. Eastern for all of your coverage leading up to and after the closing bell.
But don't go anywhere. On the other side of the break, it's Asking for a Trend. I've got you covered for the next half hour with the latest and greatest market-moving stories so you can get ahead of the themes affecting your money. Stay tuned. Hello and welcome to Asking for a Trend. I'm Josh Lipton, and for the next half hour, we're going to be breaking down the trends of today that'll move stocks tomorrow. There is a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here are some of the trends we're going to be diving into. Modest moves for the market to kick off this week. Investors waiting on key batches of earnings from Walmart and Target to the big kahuna. That would be Nvidia. We've got the takeaways from the trading day as more strategists get more bullish for 2025. Plus, a look at how President-elect Trump's pick of RFK Jr. for HHS could affect the healthcare industry. We're going to be taking a deeper dive into Kennedy's views on obesity and the implications for the biggest trend in the space, GLP-1 drugs, how it could affect shares of Eli Lilly and Novo Nordisk. That is straight ahead. And getting the pulse of the retail investor, Investopedia is out with its latest reader survey, and the results may surprise you. We've got the details coming right up. Well, Trump's pick for RFK Jr. to lead the Health and Human Services Department has put pharmaceutical stocks under pressure, and the ripple effect could put even more pressure on some big names in the GLP-1 space. Joining us now is Chris Meekins, Raymond James, Managing Director and Washington Health Policy Research Analyst. Chris, it is good to see you. So early days here, we're not even clear whether RFK Jr. does get confirmed by the Senate, but I'm sure regardless, Chris, you must be getting a lot of phone calls and questions from clients about RFK Jr. And specifically, I'm curious, Chris, in particular, GLP-1s. What are you telling your clients, Chris? Your thoughts there?
Yeah, it's a very busy time. So the reality is, over the last 2 weeks, I've had about as many clients ping me as I do in 2.5 months on average. So clearly a hot topic, and I think you're seeing that reaction in the space. What we're telling clients is that it's very clear that if RFK Jr., Robert F. Kennedy Jr. would be confirmed by the United States Senate, that this is not someone who thinks highly of the pharmaceutical industry. He's someone who believes Americans far too often are reliant on pharmaceuticals rather than other healthy options, that Americans do not eat healthy food, do not take appropriate steps to improve their health, and that the pharmaceutical industry has benefited from this, and that the pharmaceutical industry has helped contribute to this. He has previously been very critical of GLP-1s and this idea that instead of addressing the root cause of why we have this epidemic of obesity in the United States, instead, Americans are moving toward just paying to try to have a drug that can solve it. So he really believes you need to get back toward healthy living, healthy eating as root causes here, rather than just try to, take a shot now or eventually pop a pill that these drugs provide.
Hey, Chris, it's Julie here. I have a bit of a multi-part question for you, so stick with me. You said if he does get confirmed. So I guess tell us whether you think he's going to get confirmed. If he doesn't, could it be a recess appointment to sort of circumvent that? We've heard that maybe those are possibilities. And if that doesn't happen, could he get some other sort of advisory role where he would have an influence?
Those are all great questions, and usually they take me about 30 minutes to answer, but I'll try to do it in the next 30 seconds with clients. So the reality is that, and I will tell you here, Raymond James, we're not just trying to tell you what's likely to happen. We also try to keep track of market sentiment. For example, our healthcare specialist, Rachel Steffen, did a client survey on Friday. More than 100 clients responded in the first 20 minutes asking how likely is RFK to be confirmed. And the answer was more than 70% likely is what clients were thinking. I think that's reflected in the stocks. My view is that the odds are less than 50% he gets across the finish line. You need just 4 Republican senators to say not quite there. You have Lisa Murkowski, Susan Collins, Mitch McConnell, a polio survivor before the vaccine was available. And you've got Tom Tillis, Todd Young, a wide range of more than a dozen senators we've identified as potentially being in play to be no votes going forward. Now, the president could attempt a recess appointment, but Democrats would have to go along under the current rules, or Senate Republicans would have to change the rules, or the president would have to exercise an authority no president in our nation's more than 200 and almost 50-year history has ever done moving forward, and run the risk of courts overruling him for that. But regardless, I do think you're right that RFK Jr. does likely have a place to help influence policy. And I think that influence is actually going to be more on the healthy food side and maybe vaccine to some degree rather than on drug approval and whether or not Medicare is going to cover these drugs for different indications.
Let's play out just the chance, Chris. Let's say he does get confirmed by the Senate, and we know he is skeptical of the GLP-1s. I mean, he's made that very clear. I guess my question is, what impact could he actually have, in terms of policy? Could he, for example, Chris, would he have the power to derail efforts by these GLP-1 makers to gain Medicare coverage, for example?
As the secretary, he would. I mean, Congress has to pass a law to allow Medicare to cover it specifically for obesity. The president could veto that law if the law doesn't get done before January 20th, so he could advise the president to veto that going forward. The thing with RFK Jr., I think, if we step back, is he has a lot of different views, right? So right now, the danger for investors is there may be 100 different things he can do. When you're secretary, your time gets sucked up with a wide variety of other stuff. I know that. I was at HHS. I saw that happen to secretaries with extensive executive branch experience and executive management experience, neither of which RFK Jr. has much of at this point. And even they had a hard time getting their stuff done. So out of 100 things he says, he may get 2, 3, 4 things across the finish line. It's being able to identify what those 2, 3, 4 things are. I think GLP-1s are one of those things he's talking about. But there's probably others that are more likely where he could have a significant impact outside the GLP-1 space. So the sell-off we've seen might be a little bit overdone compared to what the reality could end up at the end of the day.
Well, and on that front, of course, he's most famous for being a vocal vaccine skeptic, Chris. I believe he said publicly he would not take vaccines away from people. But these stocks have really sold off significantly here. Of course, I guess the irony is, I mean, yes, something like Moderna is very reliant on a vaccine, but most of the companies that make the wide variety of vaccines that are now mandated by, say, school districts, et cetera, it's not really like the cash cow, right?
I think you're exactly right. It isn't. If these are generics vaccines, have been around a long time. They have largely been proven to be very effective. You just have to look at polio and measles as examples of that. What I will say is that when looking at the approach to what he could do on vaccines, there's a breadth of things he could do around the ACIP at CDC for recommendations, around approvals, around requesting more information. But all of that takes time. And the time is one of the most fleeting resources in an administration. And the longer it takes to get confirmed, the more drama there is around that. The likelihood of getting people confirmed and willing to work under him with his views and aligned with his views and execute his views, and the ability of the bureaucracy to bite back, which it can do. It's extremely hard to get things done in government, for better or worse, if the bureaucrats and career staff are not aligned with your views, which they will not be on vaccines with them at this point. So I think that when we look at this, his rhetoric around that obviously is something investors are concerned about. The reality of what he'll actually be able to get across the finish line and the real impact on the sales of these products is probably less than what you've seen the sell-off justify in recent days.
All right. Looking forward to this confirmation hearing. Could get interesting. Chris, thank you so much for your time today. We appreciate it.
Thank you.
U.S. stocks closed mixed to start the week. The Nasdaq climbing as Tesla shares jump. Yahoo Finance's Joshua Schaefer joins us now with the trading day takeaways. Josh.
Hey, Josh, yeah, you mentioned a bit of a mixed bag for the major averages today, and not a ton of action at the index level. So I did want to start with that move we saw in Tesla, because to me, this move we're seeing in Tesla is showing that we are going to continue to see moves from the Trump administration, or should I say rather, potential moves from the Trump administration, move individual stocks in the market. So Bloomberg News, Josh, reporting that the Trump team may be looking into starting a federal look into full self-driving, potentially approving full self-driving from the federal level, right? Look at how Tesla opened today. It opened up almost 8%, closed up over 5%. Pretty big move in Tesla shares. And you saw a pretty similar thing, Josh. I'll look at one other one for you with Coinbase today. So Coinbase CEO Brian Armstrong reportedly meeting with President Trump. That report came out after 3 p.m. Look at Coinbase stock. So it's just a clear trend we are watching day after day now, whether it's Trump tweeting something or a news outlet reporting that President-elect Trump is interested in something, it's moving all of these individual stocks. And it kind of seems to be the same ones too, right? We've been talking a lot about Coinbase and a lot about Tesla.
Tesla, I mean, that's up about 40% now.
Yeah.
since the election, which is just remarkable. And we had bulls on the show, Josh, who were big fans of Tesla, and they would argue, listen, Musk bet big, and he bet right, and he now has the ear of the president. He'll get to know the president's cabinet, and we'll see how it shakes out. The interesting with the Bloomberg story was all about how, you were talking about federal rules, and I was talking about with Praz earlier in the show about, the states play big roles too. So it'll just be interesting how all that kind of shakes out.
And it gets to your point too of with these policies, and you could see how anything that would be pro full self-driving is probably good for Tesla. But what's the actual policy, and what does it eventually mean for Tesla's story? Just feels a long way out for me at this point, and I think that's the same thing with a lot of these Trump trades we're talking about, right? Which is why we've seen so much volatility with them. But we've got another big event, Josh. Markets preparing for Nvidia earnings. So Bank of America was out today saying that Nvidia has accounted for about 20% of the S&P 500's gains this year. It's supposed to account for over a quarter of the S&P 500 earnings for the quarter. Still a large part of what's going on with the index as a whole. They also had this chart. So this is looking at the daily implied move of the index. You see here, this is Nvidia earnings, right? Bigger move expected than on jobs day, than on the next inflation reading, and on the next Fed meeting. It's going to be big. Either way, right? It feels like something that's going to matter. And to me right now, Josh, at this moment where we've had this little bit of a slump, maybe Nvidia earnings, that positive earnings story and the growth of AI can be something that maybe gives us a little bit of life back into this rally.
Some direction, especially when you're going into print, running high. The stock's up like 180% this year. Jensen Huang, is telling reporters demand for his new Blackwell product, insane is the word he used.
That's the other thing I'm talking about a lot going into this sprint, Josh. Stock's up 180%. I wouldn't necessarily take how Nvidia moves after hours for how the market's going to move. Think back to last quarter, Nvidia beats on earnings, didn't beat by enough, so to speak. Stock down. Index didn't fall, though. The S&P 500 wasn't down.
Right.
So
good point.
Doesn't always drive necessarily entirely the market action, what that stock's doing. We're going to end on some bullishness. Wall Street strategist coming out for 2025. BMO Capital Markets' Brian Belsky says he sees the index going to 6,700. Morgan Stanley's Mike Wilson sees 6,500. I want to zoom in on two things Belsky had, Josh. So this is looking at the largest 100 stocks in the S&P 500. This is when those stocks are leading. So we do a little bit better, about 12%. That's the environment we've been in, right? The Nvidias of the world carrying us higher. Belsky's calling for the broadening of the rally. So your other 400 are going to lead. He makes an interesting point. Yes, this bar is clearly lower than this bar, Josh. We can see that. But this is about a 9% gain. His point being stocks can be just fine if the other 400 are what lead us lower. But it means that he thinks we are going to stop instead of ripping 20% and 20%, over 20% as we have the last 2 years. Maybe it looks a little bit more like a traditional bull market. Year one's usually big, year two also big, year three's kind of when you take a break. And we're entering year three right now. So Brian Belsky's saying maybe returns are a little bit more normal this year than what we've seen the past couple of years.
All right, Belsky's a very smart man.
Yeah, very bullish too normally.
That's true. Thank you, Joshua. All right, coming up, we've got a reality check on retail investor sentiment next with Investopedia's Caleb Silver. More asking for a trend right on the other side. With the election results and the Fed's latest rate cuts, investors have a lot more visibility going into the final stretch of the year. And one of the winners being cryptocurrencies as individual investors buy into the crypto enthusiasm. Yet a blanket of caution is in place about recent market events, according to Investopedia's most recent survey of retail investor sentiment. For more on this, let's get to Investopedia Editor-in-Chief Caleb Silver. Caleb, always great to see you on set.
Good to be here with you. Thanks for having me.
So we always look to you to get a read, individual investors, how they're feeling. What are you seeing and hearing right now?
Yeah, so we do a bi-monthly survey of our newsletter readers. It goes out to a lot of people, and we ask them, how are you feeling? Bullish, bearish? What are you most fearful of? Where are the bubbles? How would certain policies impact you? And they have been feeling bullish and pretty optimistic, I'd say. Over 69% are either optimistic or cautiously optimistic. But believe it or not, that's down about 9 percentage points since the last time we surveyed them in October. I think they've seen the rise in assets. I think they see the visibility now on what the next administration looks like and what those policies are, and we've come pretty far, pretty fast. There's a little bit of reckoning going on among our readers right now who are all individual self-directed investors.
It's hard to, you're trying to parse this out. I think everybody is, because you have sort of what a lot of people see as the pros, Caleb, all right, tax cuts, deregulation, and then you're trying to weigh that against the trade policies. And I guess everybody's trying to make sense of this.
Yeah, so we asked them that question very specifically. What of the policies that the Trump administration has promised do you think will be the most beneficial or the most hurtful to your portfolio? Obviously, the ones that would be the most hurtful are the ones you think of, tariffs, right? They think that is going to impact their portfolios and the price they pay for goods and services. But when you ask them on the flip side, what about taxes? A lower corporate tax rate, lower income tax breaks, more income tax breaks? Obviously, that's a positive. They keep a little bit more of their money, but I think investors are caught between this. We kind of see what the future might look like, but it's still unclear about how that impacts our money, and they're not making that many changes. They may feel one way, but they're acting like they normally do.
That's what I wanted to ask you. So this is what's on their radar. Have you seen them changing what they're actually doing with their hard-earned money?
Yeah, we've seen over the last 6 months, I would say, this move towards more ETFs than individual stocks, right?
Why is that, do you think?
I think that is a caution diversification play in large part. Also, they've seen the rise of some of the indexes or some of the popular ETFs, and they want to be a part of that. But it became a little bit harder to be a stock picker after the rise of some of these really popular stocks, which, by the way, are on their top 10 list of their favorite stocks. So catching Nvidia at the right time, capturing a super microcomputer at the right time seemed a little bit harder. So the move towards ETFs is something that we've been noticing in the past 6 months. But what we always ask them this question: what would you do with an extra 10 grand if you had it? We give them a bunch of options.
What do they say?
ETFs, which tells you that they're still kind of cautiously approaching the market, buying every 2 weeks through their Roth IRAs or their 401ks.
How about cryptocurrencies? How much on the radar is that?
Oh, it's on the radar. And we always ask them about cryptocurrency, how many people have it. Usually that number's around 8 to 10%. This went up as high as 25% in the last survey.
That's a big jump.
That's a big jump.
What explains that?
I think price explains that. Also, they see the crypto environment being a lot more favorable towards crypto hodlers. They've heard President Trump promising to make America the crypto capital of the world. They've also heard about less regulation, maybe no more Gary Gensler at the SEC. That makes them bullish. Plus, there's retail products now.
Do you have a line of sight when you do these surveys, Caleb, into like who the demo is exactly? I don't know, man, woman, socioeconomically. What is it?
It's us.
It is.
It's us, but it's investors, individual investors, about 35 to about 75, 80. We got some young people there, but the responders to our survey are active investors who are, in many cases, are self-directed and like putting money to work. So they're very sensitive to the movements in the market and very transparent about what they do. But if you look at their top 10 holdings, it looks just like the Nasdaq 100, just like the S&P 500 in a lot of cases. And then we ask them, what stock would you buy and hold for the next 10 years? Take a wild guess on what it is.
Let me guess. Could it rhyme with Blackwell?
Yeah, well, it has a Blackwell product, and it's reporting earnings this Wednesday. So Nvidia tops that list, but there's always some interesting ones on that list that come in and out. The Trump media company came in for the first time, not into the top 10, but it broke the top 25. But you see where people are putting their money. Palantir also cracking the top 10 for the first time in about 4 years of doing this.
Interesting, Campbell, you've been watching the markets a long time. What do you make of where we are? And it feels like we've taken we had this big jump off the Trump win. Now we've kind of taken a bit of a breather, and people trying to figure out where we're headed. We have, a lot of bulls on the show, and I get what they're saying. The economy looks resilient. earnings growth looks decent, and they focus on Trump's pro-growth policies. But I mean, you're a pro. What do you see?
I see anytime that 10-year yield gets anywhere near 4.5%, you got choices to make, a lot of choices to make. And I don't think interest rates are going to go down as fast as the people think they are. I think inflation is going to be sticky for a while. I think we're going to be in this zone for a while. But I'm an individual investor myself. What do I do every 2 weeks? I put money into the market. I don't make big changes, and most people don't make big changes. So it's this everlasting bid, right? That just keeps kind of sending markets higher. When was the last time we saw a major dip in the market besides the other day when we had that weird currency crash?
Tell me.
Right? It was during COVID, right? It was the onset of COVID, and it lasted about 5 minutes. It's this relentless bid of putting money to work, and I think that sustains the market. I don't think people outside of us and outside of the professional investors are worrying too much about anything except I just want to keep seeing my money grow. I see my portfolio at a record high. I like the compounding that's going on. So I do think that this will be in place for a while, even though there's so much uncertainty about policy, there's so much geopolitical uncertainty there. I think unless something major happens, you're just going to see this bid happen. And I think it's kind of this slow, steady grind up and to the right. Although the next year, because there's policy uncertainty and a lot of things are going to be attempted, I think it's going to be a wild time for the markets. I expect more volatility.
All right, we'll have you back to discuss it. Caleb, thank you, my friend. Always great to see you. Coming up, chart of the day when asked for a trend returns on the other side. For our chart of the day, we are taking a look at earnings growth, and Yahoo Finance's Julie Hyman joins me now with a closer look. Julie.
You know, it is Nvidia earnings week, so even though we're at the tail end of earnings season, that is a big, important one that we've been talking a lot about. So it seems appropriate that we should look at Magnificent Seven earnings growth overall. JP Morgan and Mislav Matejka over there bringing this chart to our attention, where he's talking about that the rate of growth for the Magnificent Seven earnings has been slowing down, but he says is still coming in better than expected. Was expected at 17%, and last quarter it's been coming in closer to 25%. Now, as you can see here, it still dwarfs the growth that we see in S&P 500 companies that are not part of the Magnificent Seven. And so I guess there's some questions going ahead about where the earnings power is going to come from if this is slowing down and the others are not speeding up accordingly. However, there's still a decent amount of optimism out there about the ex-Magnificent Seven. One of those folks who's optimistic is Jeff McLean, who we spoke with earlier today.
I think there's going to continue to be broadening with the rest of the S&P 493, right? Everything's been tied so tightly to the Mag 7 that it's gotten a little out of whack. I mean, you look at what Nvidia is trading at, even looking at them versus Google/Alphabet, right? A huge difference in what they're trading at. And so I think you're going to see continued broadening out. I don't really have a huge expectation for the Mag 7 to continue their sky-high growth and gain.
So we'll see what happens. We'll see what Nvidia says this week and how that affects the rest of the market too, Josh.
We shall. Thank you, Julie. And that is wrap on today's Asking for a Trend. Have a great night.